Well, of course, the market reaction was an interesting one. Once the president indicated a Greenland framework with NATO had been reached, calling off a new round of tariffs on Europe. Joining us now is Gardner, Stifel Chief Washington Policy Strategist. Brian, great to have you with us.
Thanks, Melissa. Good to be with you.
What stands out to you? I thought what was interesting about the announcement of this framework of a deal is that the framework of the deal was made with NATO and not with Denmark and not with the EU. And so what's your take on whether or not this deal is real and what shape this deal takes?
Yeah, I think we need a lot more details on it. We're still in early moments of finding out what's involved here. I think we got a sense during the speech to the World Economic Forum that he was backing away a little bit, and so that something was on the way, further backing away. What a framework is and who it's with, the fact that the Danes so far have been pretty quiet. The Europeans themselves have not confirmed this. So I think we need a lot more information before we know what exactly is involved and how it's going to play out.
EU officials are slated to meet in Brussels tomorrow to discuss anti-coercion measures. Do you think that still goes through? Do you think that this is enough to actually sort of de-risk the situation, make things a little bit calmer?
If I'm the EU officials, I think I'd probably leave that threat on the table. It's a new world order. I mean, the old rules are out. Mark Carney alluded to this yesterday. So I think the Europeans, going back to a year ago, I put a note out last March about the evolving world order and the North Atlantic Alliance, and I think today and the last couple of days just is re-emphasizing that. So I think the Europeans are going to keep all tools on the table until they get more comfortable with exactly what's going on. There's no reason to rush into taking it off the table right now. Maybe they've toned down the rhetoric, but keep the tools on the table.
Brian, investors came into this year not really wanting or feeling as if they needed anything new out of the administration in terms of policy, right? We got the tax bill went through. You got some deregulation in order. Everyone's kind of geared up for the stimulative effects this year. And what we've had in the last few weeks is, in the guise of some affordability measures, the 10% credit card cap that supposedly was supposed to be happening by the 20th. You got, the president even said, hey, we're going to raise the defense budget by 50%. We're not talking about that, right? I just wonder, at this point, if you can project ahead as to what this administration's kind of near-term objectives might be and where investors might look out for the next volley of unexpected proposals.
So I think all of this has to be viewed through the prism, the filter of the midterm elections. Coming out of the November elections, we saw Republicans did badly. The reason why they did poorly, why the Democrats did well, was affordability. All right. And so the administration for the last couple of weeks have been trying to figure out their options. And with a party, the base of which is now a more working class, blue collar party, working class party, they are leaning into the affordability issue. So we're going to see more of this. The credit card idea is tough to implement, but it's not going to go away. The headline risk is going to stay there. I think we're going to see more on the housing side. I don't know exactly what's in mind yet, but I don't think today's executive order on single-family rentals is the end of it. There will be some proposals on allowing borrowers to tap into retirement funds to fund a down payment. So there's going to be more of that. It's interesting. I mean, just the populist era that we're in, you have a Republican president who is, in some ways aligned with Elizabeth Warren and Bernie Sanders. So there is risk. Now, I've been listening to the show for the last and the previous show for the last hour, and it's about the fundamentals, and I agree with that. But I think as we look at from a political standpoint, from a policy standpoint, you're always trying to look at the tail risks. Right? Even if they're not the likely outcome, you're looking for the tail risk in policy. And, there is a risk that the administration can further double down on this depending on what the polls look like as the year goes along. But we are in messaging time right now, and it's going to pick up as the year goes along. And the message is going to be that Washington is looking out for the little guy, and the big guy, big business, the establishment is at risk.